Welcome to a brief edition of the daily video update. This is a new idea that I'm trying for those days when not much really happens and the charts don't change all that much, or I may end up doing these each day to give folks just an overview of what's happening. And then if you want to dive deeper, you can watch the full-length daily video. But I will not be preparing a full-length video for this particular session. So let's look at see how things look for Wednesday, August 10th. And pretty much the market is just anticipating the CPI that's coming out. Inflation and interest rates have been the real focus for the entire market. Well, some of that should be answered in Wednesday's session before the market opens at about 8:30 a.m. Eastern time. We'll have the release of the CPI. Don't necessarily look for this to be a black and white type of report. Now, it could be, and it could really give the market some support. It could really help the markets go lower from here. But what often happens is the market anticipates these reports. When they come out, it doesn't tell the story completely. And so there's still kind of a gray look at the markets overall. So we'll just have to see how things play out with that. Let's go back and briefly talk about Tuesday's session. We were down 0.42%. Volume was below average, not to be surprising because of the summer months and because the CPI is coming out. The technicals, they're still looking positive, but we're seeing a little bit of short-term weakness. There's something that I'll talk about here in just a moment that we want to keep an eye on. Inflation and interest rates are the real focus right now. Geopolitical concerns. And I've added the situation in China and Taiwan because now I guess both countries or both parts, depending on whether you consider Taiwan its own country or not, now they're both doing military drills. So we'll have to see if there's any escalation with that. We had earnings. Part of the thing that set off the negative tone in Tuesday's session was Micron, a big growth tech stock. They had an earnings warning, and that set an overall negative tone. They are a semiconductor company, so that fed into the semiconductor industry group, which went over into the tech sector, which also had an influence on things like the NASDAQ and the NASDAQ 100. We have more earnings reports that will be coming out, but CPI is kind of the big thing that folks are going to be focused on and talking about. And then the recession fears, the definitions. Are we in a recession? Are we not? What is a recession? What is it not? So some comments that we can make. There's not a lot of change from Monday's session, and that was not necessarily surprising. There's a lot of anticipation ahead of the CPI coming out. One thing that I did notice is in Monday's session, when we had that higher open and we gapped higher and it was really looking good, we actually broke through upward resistance at that point, only to come back down from that. And that can be a little bit of a concern. So this could produce some short-term weakness. So we just want to keep an eye on that. If something happens and we're able to break above the resistance that we've already been dealing with from a few weeks back, and then the resistance from Monday's session, that would make things look a lot more positive. Our positive setups, they're still hanging in there. The sector rotation, the bounce off of the 200 period moving average and the 50 period moving averages, the 5 period moving average of the VIX, all of those things are still looking okay right now. We still have the 10 to the 2 and the 10 to the 8 yield curves are inverted. Fear is still right at 50. It really hasn't changed now for 3 days. So we're just considering that neutral. And then the reports that we had that came out were the preliminary reading for the second quarter productivity. It was down 4.6%. They expected it to be down 4.5%. So this was a little weaker than expected. But this is also kind of concerning because the labor costs came out and they were up 10.8%. They expected them to be up 9.3%. So this is kind of the scenario where, at least based on this report, companies are producing less, but now they're having to pay more for the folks that they use to produce those products. And that's kind of an imbalance that we've been seeing for a while. We also had the NFIB small business optimism reading that came out a little bit higher than expected at 89.9, where last time it was at 89.5. Our trend is still positive overall. The ADX is above 20, the green line's still on top. For right now, I've switched the bias back to mixed because we've had, what is this, 4 days now of not any positive gains. They haven't been real significant losses, but as we wait to see if anything big will happen, I've switched it back to mixed on the bias. Where the momentum, I've also switched back to mixed just because we've seen a lot of down days in a row. So what's our outlook then for Wednesday? The technicals, they're positive, and they have pretty much worked off the short-term overbought condition. The stochastics are still looking pretty toppy, but they tend to be kind of real jumpy anyway. And there is some weakness that is developing that could come on the heels of that failed breakout that I just talked about. Sentiment is still neutral. We have the CPI. That's the biggie. There's some other reports coming out, but the CPI is what's going to get the headlines. And then we have all the different geopolitical events. The only new one here is the military drills that I've added that are going on. But inflation and interest rates are still the biggest concern. And then there's the debate going back and forth about what is a recession and are we in one? So our scenarios, what could help us go down? All of the different headwinds that the market continues to fight against. And then the CPI, if it comes in a lot stronger than expected, the market's not going to like that. And they'll have the initial reaction, and then we'll have to see how the market reacts as the day goes on, and then the different military drills that are going on. The technicals are positive, but we might see some short-term weakness because of that failed breakout. We are still up, so that's the scenario we're going with right now. There's still a lot of folks not believing that we're going to go higher. If we do really shoot higher, the fear of missing out could kick into gear, and then, of course, the CPI. Our scenarios, they're still hanging in there overall. And our technicals are still looking positive for the most part. And we're not in a sideways trend right now because the ADX continues to be above 20 and the green line's on top. So we are positive. So our conclusion then is the S&P is positive and holding up pretty good right now. This could change very well in Wednesday's session. Short term, we're positive, but we might be seeing some short-term weakness after coming off of that overbought situation. And it wasn't deeply overbought, but enough that it would be a lot nicer if that could get completely worked off. Intermediate term, we're still looking pretty positive. Long term, though, we're still negative overall. So thank you. Let me know what you think of this shorter version. Should I do this in addition to the full-blown daily videos every day? That's kind of my thought, because I know you're busy. I know you have things to do, and you don't always have time to watch every day's full-length video. So if I make both of those available, then I hope that that helps the folks that find that useful. Have a great day, and I'll talk to you after Wednesday's session.